Here we are. Good morning, MMTs. We are going to be doing the analysis so that we can trade these options. These are all the options on both calls and put side there. These are the options here on the 7/16. They report on the 14th. We will have a separate video after we do the daily chart and the weekly chart analysis. We will cap that video for you, MMT. Then after that, we're going to go into the call and the put charts to see where inflated and deflated is, because Google's going to make a huge reaction on its earnings. The thing that we will point out here on the weekly chart, when we called a bottom in Google, it was the first major bottom of the year, my friends. And I can tell you what it was like for 2011 for Google. Let me clear out some of these trend lines. Okay? And this way, you're going to see clearly. We'll start with this weekly as well. Here is the daily chart, too. And we have a daily buy signal. We'll get into that. So let's go ahead and get this weekly up here. When we were calling the bottom on Google, there was something that we had never seen before. On a public percent DS on a weekly, it was 3.5. That's how oversold this move was. It took many weeks for this trend to finally hit such a ridiculous oversold condition that the greatest leader stock out here, in our view, is Google. And Google is a very diversified company. It was on sale. We had the big weekly breakout. This weekly breakout, so people understand, the weekly low breakout was 473.60 to this weekly high of 521.18. Now, you MMTs were here buying that Google and those call options that were extremely cheap. And what a wonderful, great move it was. But then, let's take a little bit of, and this is all public standard technical analysis now. When Google closed below the green line, the 200 week, it got above the 200 week. This blue line is more important, and it's a 10-week simple moving average in simple terms of technical analysis. That's how the public makes decisions. You don't. You use our application, which I'll show you. When we came up, we hit and we sold right up here at this trend line. What was that? This is where the last part of your major support levels in 2010 that Google was holding was right here up to the 2011 top reversal, but it acted as that same support level here on a weekly level, and it ran back up, but then bam, we sold down, and these weekly moving average crossovers crossed over the 20-week, and the fatter that it got, the weaker the move got, until we finally got down to the bottom. And you can see that you've been taught how to measure what the public thinks and how the hedge funds and institutional traders make their decisions, because this is all they can do, and they do it consistently versus our platform. Now, you can see that the 10-week is going to flatten out. Google had been in a very long-term bear trend because it was below the 10-week for many weeks. 4-week qualifier to be below it, descending 10-week going down. The wider that it crossed over in here until it started to flatten out right here on these weekly moving averages. There is a science to it. I'm not putting it on the video. You already know what it is. Is that with the big up move, that total movement that we had at 473.60, that this bar topped out at 550.68 and the party was over. That was that resistance level. Long-term support level in 2010 right here at its pullback weekly 4-week, slammed it to a 52 to a 2011 high here, to a huge reversal here, long reversal here. So having said that, MMTs, when we get into the earnings season, if Google does come down to this 200-week moving average, and that 200-week moving average is 505, let's just call it that. The 10-week moving average, Ken Flag, is 515. That's the 10-week moving average. So what used to be long-term support became new resistance on the weekly. And we were selling up there at the top, and it was time to get on the put side of the market. And boy, did that thing pay. Oh, my goodness. On Friday, expiration, weekly expiration, we were inflated. In the next video, I'm going to go back to the inflated calls that you had to buy the put side and why it made so much money. As you know, you were here doing it live MMTs. Were you not here, Mr. Will, when that event happened? Were you not told on Thursday evening that you had to be on the put side? Yes, and that's exactly right. So the bull case is that the earnings are going to come out. Now, if the earnings weren't coming out on the 14th, this is a very bullish setup on the bull pullback from the bull rally to a bull pullback at these key levels here. Now, if that 10-week moving average flattens out and starts to turn up, if they make a good report, then we're going to gap up higher. Google's going to make a big report. Either we're gapping back below these weekly moving averages, and that would create another bear. We will tell on Thursday night when we do our option strategies, we'll be both long and we'll be both short to minimize risk. Now, it's bullish for the simple fact that you're above the 200 week because that's what it says. And you're above the 10 week. But we're going into the earnings. That could change it all. However, if they do report good and you get 4 weeks closing above this blue line and it flattens out and starts to point up, that is going to be what we call a new bull trend early on in its infancy that starts from its big bear reversal to a new bull. How far that bull goes is going to be dependent on how Wall Street's going to view their earnings. Now, having said that, let's go over to the daily chart. The daily chart, which is right here, you can clearly see from a daily perspective, MMTs, that this was your big support level here. And when we ran from the pure bottom of this daily breakout, we were oversold. And we came right up to that trend line and we were overbought. Just like we are in a lot of this last 10-day bull rally that we had. Stocks are overbought going into the earnings season. Now, having said that, these key daily simple moving averages, the 10-day, it's not a weekly, now this is a daily, those are bullish crossover the 20, bullish crossover coming this way if they do a good earnings, and this is all about a new bull trend. But listen, if they don't deliver the earnings, you're going to gap way down below them all. If they do deliver good earnings, we're going to hold it, and the pullback, this is the bull rally. Bull rallies have overbought scenarios, and they come back down, and we will be looking during the earnings season at some key areas here. We're going to be looking at the 520 support level, which was a high of that breakout bar. We're going to get right back down here to where the real breakout occurred. What used to be support over here on the way up, it took out that resistance and then made a 1, 2, 3, 4, 5 day breakout through that resistance level, as they should in bull rallies. Standard technical analysis. Now we're going to hold support levels, but the earnings can change all of it. This is what the current chart says before the earnings on 5/14. So, having said that, this chart is going to change after the earnings. Right now, it's a bull chart ahead of the earnings. I said right now, it's a bull chart ahead of the earnings. And when stocks get overbought, they need to do what Google did. A lot of them are going to do that during the earnings season. They're all overbought. Indexes are overbought. They're going to, each company and each one of them are going to have to deal with their overbought levels. But this is when you get overbought. This is what happens. So, MMTs, this will be the lower support line. There's a 480. Now, having said all of that, MMTs, by understanding where we're at here for the bull trend ahead of the earnings, we are going to go in the next video, and I'll just give a little sample here on what we're going to do. We're going to take a look at how to trade this expiration. They report Thursday. These expire at the closing bell Friday. And when they're going to make a big gap like Google up and or down, You want that volatility on the expiration. Then you look at the 821. What we're going to be covering in the next video, outside of the Google, here's the daily bull breakout. One of the things that MMTs are learning to master and have mastered well is that this call side, which is a 490 call in the money, and this is a 490 put. Remember that when the put side, when Google was putting in the bottom, these puts were inflated. They came all the way from $25 all the way down here to these lows. This will be, we'll do the next video is going to have all of this, lots of strike prices, MMTs. The lows here were 90 cents, and they're still deflated for $1.90. Now, granted that these do expire on Friday, but if Google was to drop down on a bad earnings report like they do it before, $50, $60, well, I'm sorry, these are popping up here. What I will say is that call that's deep in the money, Google closed at 531. So these are $40 in the money. But look at the amount of, look at how inflated, and you've learned how to know when stocks put in tops based on put to call ratios. Inflated never stays up here. We're going to go through the next video. This is just what we're going to be doing. This is a 490 call. We're going to be doing many of these strike prices here in the next video. We're going to go through 570 call, what the 550 put is in the money now, what that looks like, with the 550 call, how much premium they were taking out of here. You can see that the 520 put had a 98% gain. Okay, with that $23 reversal on Friday when the equity reversed from its highs into that declining 100-day moving average at resistance. Bam! $23 from the high down to that low. And that created it. Now we'll get into the next video. So we'll be doing all these different strike prices. And once again, MMTs, you are the master in the option pit. Why? Because you know when to buy the opposite side of inflation and get buying deflation. This next video is going to cover specifically the Google strike prices for 7/16 expiration related to earnings and the 8/20. Let it be known